pass it over to Ron Nipping. Ron, take it away.
Hey, thanks, Sam, and thanks everyone for joining us this afternoon. It sure has been an interesting ride for the last 2 months or so. Thanks for trusting Raymond as your partner and as we work through it together. There we go. As I said, my name's Ron Nipping. I'll be joined with Tom Szymanski, and here's what we looked like back when we had good haircuts. I don't know about Tom, but I haven't had hair this long since high school. And during this time, I'm going to give a broad overview, and Tom's going to bring into the details of the program and forgiveness. But let me bring it back again to that 2 months ago when we first started this journey. Remember what the headlines looked like? Dug up a couple of my favorite ones. And I don't mean to scare anyone going back to the stress we were under at that point in time, but I think this illuminates how far we've gone and what this program has done for us and our states. One of my favorite headlines, free toilet paper with oil change. Now the scary ones were more like, it's a ghost town, downtown Ann Arbor desolate amid coronavirus outbreak. Stock market plunges again. Spiraling virus fears are causing financial carnage. I'm just living a nightmare, small business owner says. Stocks plummet. Oil prices turn negative. Hundreds of US oil companies could go bankrupt. Why coronavirus hit Michigan's economy harder, longer. Coronavirus in Florida, state deaths projected to hit 6,700 by August. There's some scary times back then. And if you remember in our conversations, many of the concerns shared by just about everybody on this call were real similar. Had to do with being in totally uncharted waters. The global economy has never shut down, especially voluntarily, and the economic uncertainty that provided. And some of those economic uncertainties were, uncertainties about your supply chain. Would it be there when you tried to start up again? Would it be able to handle your business, or would you have to totally rebuild it? Uncertainties about when the business can reopen to customers. Uncertainties about whether customers will return when your business opens. Uncertainties about whether a new wave or 2 or 3 of the virus will hit. And will your customers have the money not yet to pay you what they owe you, but pay you for future orders. It was a crazy time, and there was a lot of uncertainty and a lot of uncharted waters, and there was a lack of one thing, and that's liquidity. So let's look at what the Paycheck Protection Program was from about 30,000 feet. What was the idea? The idea was basically the government getting money into the pockets of American workers so they could pay their mortgage, pay their rent, pay for their car, pay for food for their kids. Also to keep the workers off of unemployment. They wanted to maintain that connection between the employees and their employer, so when you go to startup, you have your folks right there. And also to keep businesses alive. Now the how was the government was going to distribute money to the workers through you via the banking system and the SBA. Now they would do this through loans because politically they want to say grants, but those loans would be forgiven, so in effect they become grants. And they did it more than just for the traditional SBA small business. There was actually the increased eligibility for certain small businesses and organizations that allowed a lot more people to have access to it. Now the mechanics you all went through, and it was challenging because we had a whole time of what's it take to apply, what numbers do we use, and where do we go from there. But with that, what they're trying to do in that 8-week period, that's causing some people some consternation right now. They put that in there to have the money get into the economy as soon as possible. Now, the other part that's given some consternation is 75% for payroll costs. Again, that was the design of getting the money to the American workers. And my favorite part for the tactics was issued guidance by April 26th to provide comfort to employers. Let me know if anyone's gotten that yet. Now, here's what we're all at this seminar for, is forgiveness. It seems pretty simple in the act itself. The lender that you got the PPP loan from is responsible for determining the forgiveness within 60 days of when you apply. And you, as the person who took the loan, have 21 days after the end of the 8 weeks covered period to apply. Now here's what we've all gone through in this program and as we tried to get ready for forgiveness. What you're seeing here is all the days where the SBA and the Treasury put out frequently asked questions, FAQs, on both the program itself and forgiveness. You're looking at additional information coming out at least once, sometimes twice, up to 4 times in a week. So it's been pretty much like building the airplane as we were flying. It was pretty interesting, to say the least. Now, on May 15th, after normal business hours, the SBA issued a PPP Loan Forgiveness application and some instructions along with it, which Tom will talk about going forward. But some of the things that came in were pretty business friendly. The first couple of things, the bullets here that Tom will delve into, made it administratively a lot easier and a lot friendlier to businesses. The alternative payroll period is definitely one of them. Now, the second page here has a couple of key points. Again, that 75% of PPP loan going for payroll cost. The SBA finally decided what a full-time equivalent employee is and clarified with an explicit statement that rent obligations include leases on both real and personal property. Now, this final bullet on this page, that the application does not contain an express recertification of necessity as of the date of forgiveness of application. Remember, that was something started about 2 weeks ago by Secretary Mnuchin going after publicly traded companies that took advantage of this program. And then for privately held companies, typically within private equity groups that did as well. There was talk about having to certify that it was economically necessary to take the loan. And it did cause a lot of concern with folks. Now, as you've heard from some of these FAQs that have come forward, if your loan and all your affiliates was under $2 million, it's just going to be understood that you took this loan in good faith. If over $2 million for your affiliated group or yourself, your application will be audited and could be asked for documentation to establish that necessary forgiveness. Now, in everything we've done, we've talked about documenting what you were thinking when you're going through all those uncertainties that we talked about at the beginning of this webinar and how it affects your business. Just write them down, have them on file, because you're going to want to keep them for 6 years after the program's over. I'm going to transfer this over to Tom Szymanski, and he's going to walk through the application in detail. And then after that, we'll talk a bit about what we are waiting further guidance on, and then hopefully have time to do some Q&A. So, Tom?
Thanks a lot, Ron. Good afternoon, everyone. My name is Tom Szymanski. I head up the CFO Services Group at Raymond, and we've been kind of focused as a team to digest, the guidance and the Q&A, FQAs as they come out, to roll that out to our team and our clients. So what I want to do is walk through the actual application that came out on Friday. And what I've done is I've kind of highlighted some sections on here. And I'm just going to make this a little larger so it's easier to see. Oh, hold on, a little too large. Okay, so this is an 11-page document that was released on Friday called the Loan Forgiveness Application. And so there's a couple things that I just kind of want to talk through. There's pages that have the actual application, and then there's supporting pages with instruction and information on how to fill out the form. So, the first thing I think everyone should understand is this first highlighted section is that there's a 2-page forgiveness calculation form that's got to be filled out. There's certain things you need to initial and sign to send in. And then there's a PPP Schedule A, which has supporting documentation on it. So those 3 pages are the 3 formal documents that you'll need to submit. Our expectation is that every bank will have kind of their own process, while the information will be in the forms will probably look very closely to this, but due to the volume of loans, I think many banks will have either a portal or they'll have a specific template they've designed that will import into their system. So this is really a guidance. This first release is just so everyone can get comfortable with the format and the information needed. But you'll want to reach out to your lender here over the next couple of weeks and just kind of understand what their process is, if they're going to be running on a portal or if they're going to be running on a template that you need to fill in, upload with your source documents to complete the forgiveness application. They also have an example of Section 3. There's a worksheet. There's 2 worksheets that they want to use for tracking employee wage and hours information. Those are expected to be retained by the borrower, but they don't need to be submitted with the application. And there is also an optional demographic information form. So that's what's included as far as forms as part of this process. As we scroll through this document, there's a lot of just general basic information on how to fill it out. The first, kind of technical answer we were looking for is really on this definition of coverage period. The coverage period is an 8-week or 56-day time period, and it's the first day of the coverage period is the first day that you got a loan distribution. So if you got a loan distribution on Wednesday, that day would have been the first day that you could start to apply PPP eligible expenses to use for your loan proceeds. And so there's an example there. It's really straightforward. You can just count 56 days forward from the day you got your first proceeds into your account. But they also came out with this alternative payroll coverage period. And this is really for a couple reasons. They reference administrative convenience, but it also has to do with the fact that, to more easily line up with your payroll, what this does is it allows you to start your payroll coverage period on the next start date of your payroll period. So if you were a weekly payroll processor and you got your PPP loan on Wednesday, you could elect this alternative coverage period to start the following Monday, and then track your 56 days on that accrual basis starting on the following Monday. And where I've seen this beneficial primarily is, you got confirmation, you got your loan dollar amounts, and then you decided to call people back from unemployment the following week or for your next pay period. So what that allowed you to do is maybe not you get your loan on Wednesday and your first cash payroll is Friday. Well, that was paying for the prior 2 weeks. You may have had a lot of people, on layoff at that point. And so this alternative payroll coverage period allows you to be more forward focused on your payroll cost. And so then at that point, you'll be able to get more payroll dollars into your coverage period. So again, this alternate payroll coverage period only applies to payroll costs. It does not apply to non-payroll costs, which still, fall back to the original 56-day tracking period. One thing too, on the application, there is a box to check. Again, if you're over $2 million, there is a specific box. Again, the SBA has set the rule that there will be everyone over that size will be audited, or reviewed. Going to the next page, here's also a note on this is in the non-payroll section. The business mortgage expenses, the rents, and those areas. You are not required to report payments that you do not want to be included in forgiveness. So again, remember that payroll needs to make up 75% of your use and spending of the PPP proceeds. So there's just some folks that if you had a higher non-payroll expense component, you're not required to report some of those if you feel that it's just going to put you over your 75-25 threshold. Again, just some more basic instruction. And then here's a comment related to the the disaster loan, the EDL program, disaster loan program, that program had a grant aspect where you could get $1,000 per employee up to $10,000 when you put an application in for the SBA disaster EDL program. So all this line is, there's not a specific line on their calculation that deducts this, but they do disclose that it will be subtracted. So that appears that they're going to treat that as probably they're going to confirm it through the SBA, and then they're going to make that adjustment. So you might, as we go through this, you may ask, well, where's the EDL offset, to the loan forgiveness? And they're simply saying, if you had it, it will be an adjustment to your loan forgiveness number. Scrolling down, we get into what is the eligible cost for forgiveness and how this is summarized. And so, there is this terminology: payroll costs are considered incurred on the day that the employee's pay is earned, and payroll costs are paid on the last day of the coverage period or the alternative coverage period. So that does mean that if you're using the alternative coverage period, that will extend another week for that payment, because most companies are paying in arrears. So the only thing it does, make a caveat is that in this, count payroll costs that were paid and incurred only once. So you can't mix the methods during your coverage period. So you can't include the first one as a cash basis and then pick the last one up as an incurred accrued basis. So you need to be consistent with your approach during your coverage period. The next section is a similar comment under eligible non-payroll costs, saying that an eligible non-payroll cost must be paid during the coverage period or incurred during the coverage period and paid on or before the next regular billing date. So in some of those larger, utility, where I think this might apply is on the utility side, because let's say you were shut down pretty significantly, in mid-March, you got your loan in April or, mid-April, that utility bill might have been pretty low because your business activity was pretty low. But then as you ramp back up, your utility costs will increase, and that's probably where this would make sense to maybe cover certain utilities using the incurred period, because that would be a more active time period from a utility standpoint. Some of the, like rent, it probably doesn't matter, some of those other things, but anything that's got any kind of business activity level association, there might be some benefit to looking at that incurred during period versus simply just paid. So those are just a couple things to highlight on the instructions that come with the loan forgiveness application. This is actually the first page of the application. Again, this is a 2-page application document. The top part of this document is pretty straightforward. It wants your SBA loan number, your lender, what the lender assigned for a loan number, some of this basic information. They're going to want to know if you got again, this EDL advance and the application number, some employee counts at the time of application and at the time of forgiveness, which will be tracked on the tables that we'll get to at the end of this application. Just some questions on, basic information. And then it really gets down to just the core calculation at the bottom half of this form. And it's really, this is all summary aggregate information. So, you'll have to build these costs up to be able to summarize to get to this level of summarized information. But it's, at a high level, it's taking your payroll costs, and adding some of these non-payroll costs, and then it's going to take your 2 levels of adjustments. It's going to reduce for the 25% wage reduction, and it's also going to reduce for the full-time equivalent test. So as you run through there, it's going to be looking at your, and we'll get into the full-time equivalents once we get into the descriptions for this report. But then it essentially is going to get you down to a net forgiveness amount. And, you have to remember there's this 75% payroll requirement. So this is a pretty simple calculation. It's just taking your line 1 and divided by 0.75. And it's really saying that if you spent this on payroll, this is your maximum forgiveness. It's 75%, it's your payroll cost divided by 75%. So then it's going to compare that number to your PPP loan, and it's going to compare it to this adjusted payroll cost after the deducts for the 25% excess wage reduction and the full-time equivalent test. And after that, it'll take the number that's the lowest of these three, and then that's going to be your net forgiveness amount. So then we get into the Schedule A, and the Schedule A is where we're going to get, again, next step down, more of the detail. Oh, I'm sorry, this is actually page 2 of the application. This is where you're going to go through and initial and acknowledge these statements. One thing that they did clarify, or they did put out there, was this section here where they're basically limiting owner's compensation to the lesser of 8 weeks worth of the 2019 compensation, or $15,385 for current year. But what this means that if you were, let's say you were a W-2 employee or W-2 owner, and you had a salary of $60,000 with bonuses all in, gross wage in 2019, that's really going to be your cap. So you can't bump your wages as an owner up to $100,000 and get that included in forgiveness. So it's going to take the lesser of that 8-week equivalent from your 2019 compensation, and whether that applies if you're a partner, then it's going to look at your K-1 self-employment income, and if you're Schedule C or self-employed, it's going to look at your Schedule C. So you are going to have that cap of 2019 to compare against, and again the overall $100,000 cap of $15,385. So you're going to run through this, make these kind of certifications. They're similar to what the application had, and you're going to sign it, and you're going to submit that 2-page document along with Schedule A. And I think this time I'm going to go to the Schedule A first, and then come back up to the instructions. So this is the Schedule A, and this is kind of really similar to how we built the application up with some of the specific cost categories. So the buildup of costs is really to enter, line 1 is cash compensation from worksheet table 1, A worksheet, full-time equivalent, and then the 25% wage reduction offset. They use 2 tables. They want to track table 1 and table 2. Table 1 is for employees that made less than $100,000 in 2019 in every pay period. In table 2 is for anyone who made over $100,000 on any one pay period pro rata in 2019. Again, I'm guessing it's because the 25,000% wage reduction only applies to any employee that made less than $100,000 in every pay period for 2019. But it is kind of a so this is going to be a little bit of work to split your workforce into these 2 tables so you can calculate this cash compensation number. So you're going to have your 2 tables where you're going to have to calculate your cash compensation. There's going to be a separate schedule for owner's compensation, and that's going to get us to our total payroll cost. And then there's the full-time equivalent test, which we'll walk through. So again, this is just a little more detail to feed into the master forgiveness application. And so just going back through some of the specific instructions, again, just highlighting, that restriction on the owners, that they are capped at $15,385 or the 8-week equivalent of 2019, whichever is lower. Going through some of this additional detail. Yeah, that was about it there. And then we're going to get into the worksheet. So I'm going to again scroll down to the worksheets first. So again, they've given us samples of two different types of worksheets, Table 1 and Table 2. Table 1 is for, you know, all the employees that made less than 100,000 for all pay periods in 2019. And Table 2 is for those employees that had over 100,000 in any pay period in 2019. Really, the only difference in the tables is that the Table 1 has the 25% wage reduction, you know, column on it, where Table 2 doesn't apply. So this is where some of the more this is where a lot of clarity was provided, because I think this is really the nuts and the bolts of this forgiveness calculation, you know, to a large extent. So as we look at some of the key things that they clarified in this document, you know, the first was probably the average FTE. So they came out with a clear definition of that calculation. So it's basically for every employee, you look at the average hours per week and you divide by 40. So it's basically saying to the nearest tenth. So the most you can get is 1. So employees 40 hours and above are considered 1 employee. Anyone below 40 hours, you have 2 options. You can do the fractional calculation where you just simply take, you know, 10 hours into 40 and you take that and round it to the nearest tenth, which would be 0.25 rounded to 0.3. Or you can do a simplified method that just says anyone under 40 hours is a 0.5 count on the employee head count. So I think this is probably one where you need to run both scenarios and see which one is more advantageous for your business. But you do have those 2 options. It's the straight calculation to the nearest tenth, or simply anyone under 40 hours is considered 0.5. So that does clear up the full-time equivalent test. You know, that's probably going to be, you know, it's probably going to be a little disappointing for those companies that had a lot of part-time people and they were hoping to aggregate hours. It is a by employee test, but you know, it is applied consistently on through the entire process. So whatever method you choose, apply it consistently, and it really should be fine to get you to your number. The other thing I think that they really pointed out was this 25% excess wage reduction. They really made this clear that this is simply a salary or hourly rate analysis. So we're analyzing whether we reduced someone's salary or hourly wage by greater than 25%. So I had seen a lot of calculators floating out there that, you know, was looking at gross wages for Q1 and looking at various calculations. But I think this is going to be more of an exception-based calculation, because I think everybody knows, hey, did I take someone's pay down by 25%? You know, were they making 20 bucks an hour and I took them down to 10? You know, were they making 100 grand and I took them down to 50 grand? You know, that's the type of analysis that really, you know, you need to do. So I think this will really simplify it, because, you know, you'll be able to know relatively quickly whether this even applies to you or not. So that was a good piece of clarification. And then, you know, the last part of clarification really has to do with the full-time equivalent. So in the bill, it outlined the full-time equivalent test as comparing a prior period to the coverage period. So you had two options for traditional businesses for a coverage period, prior period, I'm sorry. You could choose February 15th through June 30th, 2019, or January 1st, 2020 through February 29th, 2020. And if whichever period was more beneficial, you could use, and you'd calculate your average, you know, employee headcount for that time period. And then you'd compare that against your coverage period. And if there was a decrease, then you had to take a straight percentage reduction on your loan forgiveness amount. So if you had 100 employees from, let's say, a prior period of January through February, and then during the coverage period, you only had on average 50, and that's where you ended, then whatever money you spent that you're applying for forgiveness, that would be reduced by 50%. So a very significant penalty, because not only were you not spending at the same rate, whatever you did spend was reduced 50%. So what they did is they came out with a couple things to help in this calculation. And I'm going to start at the bottom first. And the first is a safe harbor calculation. And this is basically saying that we're going to give you a chance. You know, we're going to get you a get out of jail free card here, that if you can pass this test, all those other numbers don't matter. And so to pass this safe harbor test, you have to, document how many employees you had during the February 15th, 2000 payroll. And you need to be able to certify that that count went down in between February 15th, 2020 and April 26th. So if it did, yes, you're good. If it didn't, the safe harbor can't apply to you. So if you pass the first hurdle, which is headcount went down, great. Then the second hurdle is that by June 30th, you got your headcount back up to where it was on February 15th. If you can do that, you can apply the safe harbor and there's no deduction against your forgiveness for this full-time equivalent test. So to put another thing in there to help you, they also added this full-time employee reduction exception, which is in this top red section. What this talks about is that if you did lay someone off and you tried to get them to come back to work and you notified them and you got confirmation that they just weren't coming back, or if you fired someone for cause or someone voluntarily resigned or requested a reduction in their hours, in these cases, if you weren't able to refill that position, you could exclude these people from your full-time equivalent test, or essentially add them back into your coverage period. So those are two ways that can help. That doesn't come into play with the safe harbor. It doesn't appear to come into play with the reduction in safe harbor, but that could come into play to help you with the standard calculation. So they laid out those two calculations on the full-time equivalent, which I think at least more clearly defines, how we calculate that safe harbor number. So those were all the significant aspects of the application. The last piece was just the optional. I'm sorry. This gets into the documents that each borrower must submit. So there's 3 pages, 2 pages on the application, 1 for the Schedule A, and then there are going to be support documentation, which is really similar to, what was requested when the original loan application. You're going to need your payroll registers, with the details to support your employees. Then they're also going to want probably the 941s, to prove kind of existence during the time period. And then, they're going to want payment receipts, invoices, to support the non-payroll costs. And you're going to want to put all those, all that documentation together, source documentation. And then on the FTE, they are going to want you to also put that information together, and summarize it into a schedule. And, the one thing I didn't mention is that there is also a seasonal calculation for FTEs, where you can pick a consecutive 12-week period between, February 15th and June 30th. I'm sorry, between May 1st and September 15th. So you got a couple windows there that you can see what works best for my seasonal business to complete the FTE as an alternate to the traditional dates that were given for the businesses. So there's pretty good information here on the documentation of everything that they're expecting you to put together, to support and also to keep on file. Particularly if you're over the $2 million threshold, there's going to be a bigger emphasis on really making sure your documentation and your calculations are very robust, because there will be some level of review for all loans over $2 million. And then there is an optional form just on some demographic information. So I know that was a lot of information, and I think that leaves us about 15 or 20 minutes for Q&A. So we're gonna pop back into that. Just before we get into the Q&A, the one thing we just want to talk a little bit about what we're still waiting on for guidance. And so while this application did do a nice job clarifying some things on FTEs and some of the tests, what it didn't still do is clarify, what practices or what types of payments really are going to be included, can be included as far as within the 8-week period. So, if we got a month deferred on rent, can we make that 1 month deferred in our 2 normal months? Can we get 3 months of rent in this 8-week coverage period? What can we do for health insurance payments if we got a deferral from Blue Cross Blue Shield? So I think some of those things we're still kind of waiting to see how much of certain expenses we're going to be that the SBA will allow to put into the 8-week coverage period. So if you looked at that slide earlier that showed, it was 6 weeks, and I think we're up to FQA number 47. 46 of those 47 FQAs were related to the application process. Only one had a mention of forgiveness. So I would anticipate we're probably going to get that or double on the forgiveness side. So we expect a fair amount of question and answers to come out from the SBA, which is going to really kind of frame up. And I know that everyone's under pressure because some of you have had your loans for 3 or 4 weeks. And unfortunately, we still just don't have some of those answers when you say, hey, can I pay 3 months rent in the 8 weeks because I deferred a month? Some of those things, we just don't have quite the clarity that we do expect to get here in the next couple of weeks. So those are some of the things that we're still waiting on additional guidance for. Ron, do you have anything else?
Yeah, thanks, Tom. I think that was great. I think the point to be made on looking for more guidance, you've heard that phrase probably more times than you've ever wanted to hear, is subject to further guidance. We're waiting on further guidance. But as Tom said, there's only been one issuance of anything, and then this application. But the Secretary of the Treasury did promise more guidance, quote, soon, and technical corrections as early as this week. So keep your emails open and look for another invitation, because as soon as we get that guidance and we can digest the technical corrections, we'll have another presentation just like this. Now, there are certain things that the Secretary and the SBA can change on their own with their quote unquote technical corrections, but a good number of the fixes are going to be required to have legislation from Congress. And that's going to be tough, and just the current political environment. But even to the point of right this week, the Senate is in session. They're going on their Memorial Day vacation next week. The House is in vacation mode this week, coming in next week. So you're looking at for potential, the earliest is probably June for some legislative fixes, which can be incredibly frustrating. But I would just like to step back again. What we've gotten so far with this application and the points that Tom was talking about is probably 80, 85, 90% of the forgiveness for most situations. Now, if you have a dental practice or restaurant group that have been shut down because of the state, and you can't be open yet, and you only have 2 weeks of your 8-week coverage period after Memorial Day when you could potentially be open, there's a lot of frustration there. And that's where reaching out to your business advisor and developing the strategy and seeing what you can do while we await these technical corrections, I think it'll be well worth the time. We've been getting a lot of questions, comments, queries on this plan going forward. So probably for the next 15, 20 minutes, we'll go through some of them. In addition to Tom and myself, we have Susan West, who leads our human resources group. And since Susan didn't have a chance to talk yet, I'm gonna put her on the spot first and say, Susan, you've talked to dozens and dozens, if not hundreds of our clients. What's the top 2, 3 things that they've asked consistently that you think this audience should hear on the forgiveness part, on the questions on unemployment, how all that interacts?
Yeah, so the main thing is, what do I do with the employee who's refusing to come back to work? They're making more on unemployment. So that's a case-by-case basis. It's definitely one that You should be having an understanding of why exactly that employee is choosing not to come back, because in that case, if you're doing a return to work, they may be eligible for a leave. And so therefore, you do need to pay that leave. It does not mean that falls under the PPP, because that would be considered double dipping, as you get a tax credit for that. So that's one major area. The second we actually had a question on here, Ron, was around if they are utilizing a work share program, would that be in conflict with the PPP? Well, it's not in conflict. What it means is you are reducing the hours and therefore the pay that an employee might be making, and they're receiving some unemployment. So it's a balance of, if you choose that program, then that means it limits or reduces the amount of payroll that would fall under the payroll paid, and then may ultimately impact how much is applied towards the loan forgiveness. But it is something you can still do in parallel with the PPP. So those are sort of the highlights of what's top of mind from employees returning to work.
And then one thing I've heard you mention over and over again is documentation and procedures, things like the savvy employee and the scared employee, and how
Yes.
to tell the difference in how you document what's going on.
Yeah, so many times we're finding employees are just afraid to come back. We call that the fearful employee. They may be high risk or living with a high risk member of the family. In some of those cases, again, they may be eligible depending on whether it's a very serious health concern and they're getting medical diagnosis, but many times it's not. And so having that dialogue is critically important right now. You want to document that you had the conversation, where it ended up, were they eligible for a qualifying reason under the leave, were they able to provide the documentation? And if not, now it's another decision point. And do you choose to leave them on layoff, on unpaid leave? We have the Michigan state order that's indicating please do not discharge any employee while it's in place for a COVID-related reason. End of May 28th, we'll be making a decision point. What does that mean? If it's a true reduction in workforce, your business is reduced, then it could be a true termination and very eligible. So lots of conversation around that. From the savvy employee, we're seeing employees who are getting very interested in state paid leaves. So did you actually pay me my paid sick leave? Did you pay me my paid medical leave? What PTO or vacation time am I eligible for? So a lot of conversations where it's our responsibility, I believe, as employers to educate the employees so they understand how some of these benefits overlap or integrate, as such a paid leave. The Michigan medical paid leave might be already in a line and integrated with your vacation time, but employees are, really maybe struggling and therefore looking for help with the finances, but also don't understand their responsibilities, that if you actually are asked to return to work and you're refusing to come back to work without a valid reason, you may be jeopardizing not only your unemployment, but your medical benefits and ongoing employer benefits. So the whole idea here is make sure you're having dialogue with employees, have somebody who's very educated, knows the right questions to ask, is taking the right documentation. So you're minimizing the risk for you as the employer, but also helping to educate the employee fully on their legal rights as best you can. Yeah.
Well, thank you, Susan. It's the HR part just adds another complexity to the whole discussion. It's great to have you on the team to help our clients through this. Now, Tom, one of the questions has to do with what happens if you don't get 100% of your PPP loan forgiven. What happens to the rest of the money? What can I use those monies for, or do I have to repay it immediately? What's the options?
Sure. So, any PPP loan amounts that's not spent during the 8-week period it's not forgiven. That's the easy first part. And anything that's, and then also it's anything that's not forgiven. So, in an example that, you had $1 million loan, you spent 500, but let's say 100 was disallowed, and so you only end up with 400,000 of forgiveness. That 600,000 would then roll into a loan. That loan is accruing 1% from the day you got funds. But once the loan amount, then as the loan amount's identified, there's 6 months of deferral on that loan and an 18-month amortization to repay the balance. But again, there's no prepayment penalties. So, I think it's critical that you understand if you're going to have any cash that you spent that doesn't give forgiveness, because if you don't spend it, you can just simply pay it back if you don't want the loan. But I think with a lot of businesses, it gets down to a cash analysis. Is if I really need the money, can I be content with it being a loan and being as supporting working capital? Now, again, the 75-25 rule doesn't change if you don't spend the money past the 8 weeks. It still needs to be spent in that mechanism. So you still have to use that money, even if you didn't spend 500,000 in the 8 weeks. You can keep it. You can continue to spend it, but you have to spend it 75% on payroll. So you can't just buy a piece of equipment or something, pay a bunch of suppliers. I mean, it's got to be used for those defined payroll costs and the defined non-payroll costs, the rents and interest and leases, in that 75-25 split, if you plan on intending to use all the proceeds.
Right. And I know many of our discussions we've had together with our clients, we've talked about the importance of when you receive the loan, or preferably even before you receive the loan, you do a 13-week cash flow projection and then manage that projection to be able to see if you're going to be over 75%, under 25%, if there's going to be rent, utilities. Can you talk about any of the strategies that could be involved that our clients should talk to their business advisors about?
Yeah, I think most clients are looking at it, in a multi-tiered approach. What's best for my employees? What's best for my business? And specifically for my business, what's best for my cash flow? I've had a number of clients that have really tight cash flow. They don't have access to other capital. Maybe their line of credit's already tapped out with their bank, and there's just not a lot of other capital available to them. They're really worried about July, August, and September. And so if their employees are actually doing better on unemployment, then they're looking at maximizing cash and converting a bigger piece of the proceeds to a loan, because it'll still be in their bank account on July 1, right? And so they're really looking at what's best for the business, what's best for the employees. Where other clients, they're worried about retention. They've got a lot of engineers and they can't afford to put them on unemployment, so they're bringing them back immediately as soon as they got the PPP, even though it's a pass-through. That's what the program's designed for, but they're really geared on retention and keeping those engineers on their staff and making sure that when they come, when they come back up, they still have the talent they need, to compete. So it really depended on each business. But yeah, having that 13-week cash flow and understanding where am I going to be at the end of PPP will help you understand, should I focus more on purely forgiveness, or should I focus maybe more on, cash management and maximizing the cash through this program, not in giving up maybe a little bit on the forgiveness side, so you're in a better cash position for the months to follow. Yeah,
and there are other alternative strategies, like looking at what you can do within your retirement plan for employer contributions. Traditionally, if you've outsourced certain types of work to 1099 folks, would it be worth bringing them on as W-2? And then there's ramifications to that Susan could talk about. But there are ways to look at trying to increase the amount of forgiveness in these PPP loans, but making sure you focus on, first, what Tom said, making sure the business is healthy, and then maximizing forgiveness. And that's where reaching out to your business advisor or talking to any of the panelists here would probably be worth your time to do that. There's a lot of questions still on the alternative period for the payroll. Like if I get my loan deposited on Monday and I have a pay period that's paid on Wednesday for something 2 weeks ago, how does that all work? And how does the alternative period?
Yeah, I think I see quite a few questions on, I will say that there is one question. Monthly is the one that we don't have, clear guidance on how far that will extend. It would seem like it's more in the weekly and the bi-weekly that you can extend to the upcoming start of the pay period. So we'll watch for further guidance for some of these longer, like a monthly payroll. But essentially, yes, if you've got a weekly payroll, if you got the loan on Wednesday, you could start your alternate tracking coverage for payroll on the following Monday. One person did ask, can I use both methods and get a nice payroll in? Now the answer is no. Whichever method you choose, you're either going to get 8 cash payrolls in the first 56 days. So I made eight payroll, the equivalent of 8 cash payroll weeks, or you're going to go to the alternate method where you go accrual. You're going to get your 8 weeks, but it's going to be starting with your next payroll period. So if you're on a bi-weekly or maybe even a bi-monthly, and you got your loan on the 8th or the 7th, and your next payroll starts on the 15th, you could roll to the 15th and then start your payroll period at that point. So we think in that 3 to 10 or 12, 10 days, it's a roll forward. Once we get past that, we haven't seen any examples of a month, a full month rolling forward. So because that could run into some timing, because you have 21 days to put your application in. So we just want to be sure we could keep within that timing and allow enough time to get out, because it's going to take a while to get all this data. So I think you just have to evaluate that to see that you can fit with the overall timing.
Yeah, because I know, again, it can be so frustrating without detailed guidance, but then again, that's where I don't think we're going to be able to get guidance on every piece. I think there's going to be parts where we have to make judgment, and that's where we go back to what's the intent of the act and what makes sense. One that's I would doubt is going to get guidance, but I would think that many people on this call have, are health insurance premiums. Many people pay it on a quarterly basis. So if you're paying second quarter health insurance premiums for your associates and your 8-week period is in the middle of that quarter, you're going to have to prorate that out. That would make sense, that you take 8 weeks of that quarter and do it, but that payment is not anywhere near your 8 weeks. So there's going to be some things that we're going to have to take positions on and just be able to document and justify. And again, the forgiveness is going to be up to your bank where you took the loan from. So just like the loan application we work with the banks, how do they want to see the information? We'll do the same on this.
Yeah.
Now, there's been a couple of questions on bonuses. Again, recognizing that you have to keep people during their 8-week covered period under 100,000 annualized. Bonuses could be paid for people under that to use up some of their forgiveness. People have been doing it. They call it Patriot bonus, hazard pay, extra pay. Susan, Tom, do you see any problem with people's salaries or hourly wages going up as long as they stay under that 100 annualized?
No, I think the only thing you got to be concerned with is that if you've got a documented annual bonus program and you're trying to pay a 2019 bonus or a full year 2020 bonus, I think those are the areas that you're going to have to be a little more sensitive, because they have used this 850 seconds terminology in a lot of their guidance, which kind of means a pro rata share. So I think you're going to want to be a little careful, when you're evaluating the bonuses, that, because like the hazard pay is easy because it's within that period or within that time period. But I think when you start saying this is, historically this is an annual bonus and you're pulling it forward, those are the things that there may not be exact guidance that says no at this point, but I would expect there will be some guidance giving us some limits on what types of payments can come in this 8 week. We do have the 15,385 cap that we need to be concerned with, but that's the only area in the bonus section that I would, the conservative approach would be to take 2 months of your bonus and put that through, and that's consistent, or even 2.5, which is what the loan was based on. But that 2 to 2.5 would seem to be a conservative approach. You get beyond that, then I guess you're just hoping that guidance doesn't come back to counter it. And so I think at first, at least, you could make some level of payment and then wait towards the end of the program. And then if you want to do something else, I guess, see if guidance has put some caps on there that you can work within.
Okay.
I think the only thing I would add to that is just make sure you're not putting something in place that would move towards a discriminatory practice where you're picking and choosing who actually gets bonuses, and that you're choosing not to provide a bonus to somebody who's at 100,000 max. That's not the intent of what a bonus or a compensation plan should be. And so just be careful whatever you're implementing, that you're not ignoring the other Fair Labor Standards Act guidelines or discriminatory, potential discriminatory or biases that you would not want to put in place during this 8-week period.
Thank you, Susan. Thank you, Tom. Now, we have time for probably one more question on this. The other questions that have been submitted, we'll work to get them to your business advisors, but again, please reach out to them if you don't hear from us in the next day or two, because we've worked incredibly hard internally to train up our folks and to be able to provide you the guidance and advice you need. But Tom, last question has to do with operating and capital leases. What counts as rent for real and personal property and what doesn't?
Sure. So when they released the application, they did make it, clear that that operating leases and rent were both, eligible for these non-payroll costs. So if you've got operating leases, those can be included for, forklift equipment, things like that. And also on the capital lease side, the mortgage interest was also, clarified as both real and personal property. So again, if you've got a equipment loan, the interest component for that you could include that on the mortgage interest. If you've got an operating equipment lease, you could include that full lease payment under a lease. But those dollar buyouts or those capital lease, items would fall under that mortgage interest category versus, I know a lot of times they call them leases, but when it's more of a finance arrangement. So you should be putting the capital, dollar type buyout leases, capturing the interest component, but not rolling them into a rent/lease category.
Okay. Thank you, Tom. Thank you, Susan. Especially thank you for this hour of providing business wisdom to our clients. I would just one more time strongly recommend that the attendees reach out to your Raymond business advisor, develop the best strategy for your business to optimize the use of the PPP funds and maximize the forgiveness based on your company's facts and circumstances. These slides will be available. This webinar has been recorded. And again, please reach out to your advisors. They'll be reaching out to you also with questions, and we'll try to get these FAQs or the questions and the comments answered as well. Thank you, everybody. We appreciate you attending. We appreciate your trust, and we appreciate your business. Have a great rest of the day.